We're looking at gold. It's a trade that's a bit of a mystery today. Now, while usually considered a safe haven, the bullion's barely budged since President Obama's re-election earlier this month, despite all the fears around the fiscal cliff. Grizz, what is keeping gold so range-bound?
You know, I think, Jackie, it's a combination of things. I think, number one, gold has done very well this year. I mean, if you bought it earlier in July, you're buying it about $150 lower from where it is right now, roughly that amount. So I think you're seeing profit taken in gold because it was a good trade for people to get in. And then also you saw this like little recent sell-off in gold. I think more people got long there. So I think they're looking to take profits there. I also do see a deal. Well, maybe not a full deal, but something in the fiscal cliff, and I think that's kept it muted also.
Okay, but also yesterday we saw a big move to the upside in gold, and they were talking about optimism on the fiscal cliff as well. So why are we seeing it lower today by $10?
You know, I scratched my head on that one because my feeling is if you get a deal on the fiscal cliff, the fear risk trade goes off of gold. People start going back into equities, so they sell the gold, start buying equities again, and I think that the safe haven of gold becomes less of that.
Okay, well, you could call our next guest the biggest gold bug out there, but could all the uncertainty around the fiscal cliff be changing his tune? Peter Schiff is the CEO of Euro-Pacific Capital. He's also the author of The Real Crash, America's Coming Bankruptcy. Peter, great to have you on Futures Now. Want to start off with the fiscal cliff here. If we get a deal and we avoid the cliff, what kind of deal do you think it's going to be? How's that going to impact the gold price?
Well, you know, first of all, Ben Bernanke is a much bigger threat to the U.S. economy than the fiscal cliff. In fact, if it wasn't for his accommodation, all the QEs, we wouldn't have to go over the fiscal cliff. In fact, ultimately, because of what the Fed has done, we're going to have to go over a much bigger cliff. It's part of the solution to solve the problems that the Fed helped create by allowing the government to get so big. But I think if we avoid this cliff, which is a mistake, we actually need a bigger cliff that has a lot more government spending cuts. But if we get a deal, which I think likely we will do, because politicians want to pretend that they saved us from this phony crisis, so they set us up for a bigger one. But if we avoid the cliff, that is very bullish for the gold market, because it means that trillion-dollar-plus deficits will perpetuate. And these big deficits are what is undermining the dollar, because the Fed has to print money to finance them. And the more money they create to buy up all the bonds that nobody wants, the higher the price of gold is going to go.
All right. Well, first, let me respond to that for a second, because I agree with you in terms of the politicians having to try to find some deal so that they don't look bad, Peter. So I think you're definitely right on that. But when you talk about the money printing, if that scenario continues, it's something that I touched on last time in our last show as well with our guests. Do you think that that is, in fact, what's going to prop these markets up? Are you worried that that's the only thing, the only kind of momentum that we've got on our side?
Oh, it is. Unfortunately, all the moves that we're getting in the U.S. stock market are driven by inflation. It's not because the economy is getting better or that real earnings are going to improve. It's just that the value of money is going to be destroyed. And if you want to escape the destruction, you have to own something else. You have to own real things. I think that gold is going to outperform stocks, but stocks are going to outperform paper, and especially bonds. I mean, you still have this bubble in the bond market that is yet to burst. It's the Federal Reserve and foreign central banks that keep supplying the air. But the problem is the more money that central banks have to print to keep buying up these treasuries, the less the treasuries are ultimately worth, because you're destroying the value of the currency that they're denominated in. So this is very bullish for gold. And, you know, unfortunately, the politicians, they're trying to scare us with the fiscal cliff. All the fiscal cliff means is that we have to start paying for all this government. So what's really scary is all the government that we have. And if politicians want to spare us from the fiscal cliff, then cut government spending so we don't have to pay for it.
Peter, okay, you mentioned the central bank, and I agree with you on 80 to 90% of all you're talking about, because one thing you didn't even mention was the Japanese central bank talking about adding massive accommodation as well, and perhaps even sparking a little bit of a currency war. But when you say that the entirety of the stock market rally has just been dollar-related, you imply that there hasn't been any improvement in the economy. Do you deny that there hasn't been some improvement in the economic condition?
I absolutely improved. I don't deny that there has not been improvement. We have spent more borrowed money. And so superficially, it looks like things are getting better until you look beneath the surface and discover why they're getting better. Remember, things looked like they were getting better in 2003, 2004, 2005 as the Fed was inflating a housing bubble. So if you just looked at GDP, you thought the economy was improving. All we were doing was setting ourselves up for a disaster. And I also don't discount what's happening in Japan, what's happening in Europe. Everybody is printing money. That's why gold is going up in all currencies. The Japanese have had this kamikaze monetary policy for a long time. Even though the yen is appreciated, it should have appreciated much more. And the real problem in Japan is that the Japanese government is foolishly trying to suppress the yen so that Japanese exporters can sell products to Americans who really don't have the purchasing power to pay for them. Central banks all around the world are making that mistake. They're trying to prevent their currencies from rising against the dollar. It is foolish policy, but it is very bullish for gold.
Peter, it's Anthony Crisanti. I was reading a couple of notes that you had written earlier, and you said, let this country go over the fiscal cliff. Let's see what happens. But when I look at the fiscal cliff, it's 5-to-1 tax increases versus spending cuts. Don't you think that kind of tax increase that really is across the board, every American will feel it, will be extremely negative for equities, number one, and commodities also?
Well, it's definitely negative, but the problem is continuing the deficits is an even bigger negative. Look, I want spending cuts. That's what we need. But if the public wants all this free stuff from the government, they have to find out that it ain't free, that it costs a lot of money. And it's better to pay for government through taxation than through debt and inflation. And I would rather taxes go up on everybody than just the rich. Because if the public thinks they can get stuff by soaking the rich, they're going to want more of it. The only way the public is going to demand less government is if they've got some skin in the game. If the average voter knows that if he wants all this government, he's got to pay for it, it might not seem like such a good deal, and we might get some more resistance to more government. But if you let the public think that just the millionaires and billionaires are going to pay for all this, then it's going to continue.
Hey, Peter, great series of points there, but just want to get your take on the final gold price. Last time you were on the show, you told us $5,000 over the next couple of years. Do you stick to that?
Well, I don't know if it's 2 years, 3 years. It's hard to put a timetable on it. But I do believe that gold will ultimately eclipse 5,000. I don't know how high it's going to go because there's no ceiling on how low currencies can go. There is no intrinsic value to the dollar. There's no intrinsic value to any fiat currency. There's no limit to how much money the central banks will print. And Ben Bernanke has said that he's going to keep printing money until the economy gets better and we create jobs. Well, printing money isn't going to make the economy better. It's not going to create jobs. It's going to prevent the economy from recovering. It's going to destroy jobs. So he's going to print money indefinitely. So there's no bottom on the dollar. And so there's no ceiling on the price of gold.
Yeah, many people out there, of course, saying that money printing is a little bit of a vicious cycle. Our thanks, of course, to Peter Schiff of Euro Pacific Capital. Thank you so much for joining us.